From the floor of the CME Group, this is Danny Riley on today's Cash Close, and I'm not happy. The name of this video is going to be the S&P 500 New Year's Slip and Slide. I've done this video like 6 times. The high of the day in the S&P came in at 2040 even early in the day. The low came in at 2010 even late in the day. And last, we're 2015.30. We're down 31 handles. Total volume, 1.9 million minis trade and 7,000 big S&Ps trade in the pit. MOC by 900 million. Now look, tomorrow we've got the Gallup ECI, US ECI, we've got the Redbook, we've got the PMI services number, we've got the factory orders, and we have the ISM non-manufacturing index. Now look, I was wrong about buying this stuff early in the opening print, but you know what? It didn't take long to figure this out. Once crude kept going down and the S&P failed at its highs and then started to lose premium, I knew that the S&P was a dead duck because you know what? There's a lot of stops below, and we have that kind of premium levels, and you have sell stops below. The algos chase those sell stops, and that just becomes a foregone conclusion. Now, I still believe what's going on here, despite these buys on the close, I still think the vast majority of these mutual funds are adjusting their book. They're buying bonds and they're selling stocks. And you can see that in the way the bonds closed today. But that said, there's major liquidation going on in the crude oil stocks. You know, crude is going to end up down over 5.3% today, and crude volatility has jumped to over 66%. Very, very volatile. You know, we get a lot of action in the S&P, but I'll tell you what, crude oil is very, very volatile. In addition to that, the VIX itself on the S&P got up to 2129 today, or up 2.5%. Now, there's still a lot of key economic reports this week, and most of it geared toward the end of the week. But at that said, this is a shortened expiration, you guys, and I really think that when you're looking at this, you're going to have to reconsider and look at the PitBull Thursday Friday low that comes in this week. And I'm also starting to look at some cheap calls. I was really looking at the Feb 2075s to the 2100s, and they all play out in between like $1.50 to $2 to all the way down to 50 cents. And I believe what happens here is as more people get short into this decline, whether we get down to 2080, I don't know, that was that old low. I still think that there's a big possibility of a big pop here in the S&P. If crude oil is to rally $3 or $4, the S&P is going to be up $40. So we're going to leave it like that. Going to try to buy some of these calls today and then add to that position as we go into the latter part of the week. I'll see you guys tomorrow in the opening print.